What is an ETF? When people talk about investing, one of the terms you'll often hear is ETF. But what exactly is it, and why has it become such a popular investment vehicle? Let's break it down in simple terms. ETF stands for Exchange Traded Fund. At its core, an ETF is an investment fund, similar to a mutual fund, but with one big difference. You can buy and sell shares of an ETF on the stock exchange, just like you would with a regular stock. This makes ETFs highly accessible, liquid, and flexible for all types of investors. Think of an ETF as a basket. Inside that basket, you'll find a collection of assets. These could be stocks, bonds, commodities, or even a mix of them all. For example, one ETF might hold shares of the 500 largest companies in the United States, while another might track only technology stocks, gold, or government bonds. By buying just one share of an ETF, you gain exposure to everything inside that basket. This is one of the easiest ways to diversify your investments. So, how do ETFs actually work? Most ETFs are designed to track the performance of an index. An index is simply a list of investments created to measure a part of the market. For example, the S&P 500 index tracks the 500 largest publicly traded companies in the US. If you buy an S&P 500 ETF, you're essentially investing in all 500 of those companies at once. If the index goes up, your ETF generally goes up too. Now, why do investors love ETFs so much? There are a few key reasons. First, diversification. With just one purchase, you can spread your money across many different companies or assets. Instead of betting on only one stock, you're lowering your risk by holding a group of them. Second, low cost. ETFs usually have lower fees compared to mutual funds because most are, passively managed. That means they're simply designed to mirror an index rather than having a team of managers constantly trying to pick winners. Third, flexibility. Since ETFs trade on exchanges, you can buy and sell them throughout the day, unlike mutual funds which only trade once per day after markets close. This allows investors to react quickly to market changes, or to use strategies like stop-loss orders and limit orders. Fourth, accessibility. ETFs cover nearly every corner of the market. Want to invest in clean energy? There's an ETF for that. Interested in emerging markets, real estate, or even cryptocurrency-related companies? There's likely an ETF that fits your interest. Of course, ETFs aren't risk-free. If the market or sector your ETF tracks goes down, so will your investment. Some ETFs, like leveraged or inverse ETFs, can be even riskier because they're designed for short-term trading, not long-term holding. That's why it's important to research and choose ETFs that match your investment goals and risk tolerance. To sum it up, an ETF is a powerful, low-cost, and flexible way to invest in a broad range of assets. By offering diversification, easy trading, and wide availability, ETFs have become one of the most popular investment tools for both beginners and experienced investors alike. Have you invested in ETFs before? What have been your results?